appetite soars as government smashes Treasury bill target with a 1.5 billion cedi oversubscription. And also, economist Joe Jackson warns against reckless spending as Ghana exits IMF bailouts.
Whether we can grow without borrowing recklessly again, the discipline must continue. The question is, how much can we spend without being reckless?
Plus, Ghana's financial sector assets surged 23% to 647 billion cedis in 2025.
The financial sector was more resilient, bolstered by strong profitability and solvency positions across all the four financial industries.
I am Christabel. Success Trevor will bring you details of our headlines and other stories shortly. Stay with us. Let's settle for the details now, because the government of Ghana's domestic borrowing strategy saw another major victory on Friday, May 15, 2026, as its weekly Treasury bills auction recorded a massive oversubscription, signaling a robust resurgence in domestic investor confidence. According to the latest auction results, government successfully raised 5.475 billion cedis from the domestic market, comfortably exceeding its initial target at 4.3 cedis across the 91-day, 102-day, and 364-day tenors. There's more in the following three Business News Desk reports.
Investors aggressively put together a total of 5.798 billion citizen bids, representing a highly favorable subscription rate of 134.84%. Out of the total bids tendered, government chose to accept 5.425 billion cedis. This aggressive outcome marks the second consecutive week of oversubscription. It firmly cements a turnaround for the Treasury, which recently broke a grueling 7-week streak of undersubscription, a challenging period where market appetite repeatedly fell short of the state's short-term financing needs. A closer look at the data shows that the short end of the curve drove the bulk of the demand. The 91-day bill pulled in the highest volume with 3.833 billion cedis in bids, of which government accepted 3.653 billion cedis at a yield of 4.91%. The 182-day bill attracted 709.83 million cedis in tenders, with 671.72 million cedis accepted at an interest rate of 7.04%. Meanwhile, the 364-day bill secured 1.255 billion cedis in bids, with the state taking 1.150 billion cedis at a yield of 10.38%. The 1.1498 billion cedis, representing 34.82% oversubscription rate, demonstrates a refreshing wave of liquidity and renewed market trust in local sovereignty instruments, providing government with a comfortable buffer as it navigates its fiscal targets for the year.
Following Government of Ghana's announcement that it has concluded its IMF Extended Credit Facility bailout program ahead of its schedule, economist Joe Jackson has cautioned that the nation remains on probation. Speaking in response to Ghana's transition to a non-financial policy coordination instrument, PCI, the Institute of Chartered Economists Ghana fellow emphasized that while the country has successfully stabilized its economy, it must now prove it can maintain fiscal maturity without international oversight holding its hands.
It is probation with more freedom. Ghana has stabilized, but it must now prove that it can behave without a lender holding its hand. We're not leaving the IMF per se. We're leaving IMF money and moving to IMF monitoring and credibility support. That's important to understand. It's this way. We were patient. We've exited the emergency ward, but we are not ready to run a marathon. The next test is whether we can grow without borrowing recklessly again. The discipline must continue. The question is, how much can we spend without being reckless? Remember, less than 18 months ago, we were in crisis. It is the iron discipline that we've kept that has brought us this far, that now we can all be confident about existing. The truth of the matter is this: discipline means that we demonstrate to the world that we can keep our affairs in order and spend money wisely and borrow money only to invest in businesses that will yield a return quickly enough to pay for itself.
You heard there economist Joe Jackson. Meanwhile, following government of Ghana's exit from the IMF bailout financial program, a policy expert is urging the states to look inward for its next economic frontier. Executive Director for the Center for Policy Scrutiny, Dr. Edu Owusu-Sarkodie, is calling for an aggressive overhaul of how the country manages and profits from its natural resources to achieve true fiscal independence. Reacting to government's transition to a non-financial policy coordination instrument with the IMF, Dr. Sarkodie argued that the bottom line for post-bailout sustainability lies in maximizing domestic revenue mobilization rather than relying on external assistance.
I want to recommend that we aggressively pursue domestic revenue mobilization. The bottom line is that we should try as much as possible to get enough revenue from our natural resource. Gold today accounts for more than 68% of our total exports. In fact, the value of gold is almost equal to Ghana's total revenue and grants, the projection for this year. How do we enter into those contracts said that the nation will get enough from gold and crude oil? Even if we don't want to nationalize and we want to involve the private sector, the state must increase its participation interest. The participation interest in crude oil is around 16%. I want this increased. Gold, Ghana's participation interest in gold production should be increased.
You heard the Executive Director for the Center for Policy Scrutiny, Dr. Edu Owusu-Sarkodie. Ghana's financial sector recorded strong growth and improved resilience in 2025, with total sector assets rising by 23.2% to 647.25 billion cedis. According to regulators, the country is moving from economic stress toward financial stability.
The Financial Stability Council has launched the 2025 Financial Stability Review, highlighting signs of recovery and stronger resilience within Ghana's financial sector following recent economic shocks and debt restructuring challenges. Delivering remarks on behalf of the Governor of the Bank of Ghana and Chair of the Financial Stability Council, Matilda Asante-Asiedu said total financial sector assets expanded by 23.2%, equivalent to 45.1% of Ghana's GDP.
The financial sector was more resilient, bolstered by strong profitability and solvency positions across all the four financial industries. Various initiatives have been undertaken to further strengthen the financial sector and will continue to do that going forward.
The second Deputy Governor said regulators are also implementing new measures, including enhanced monitoring of risks within the virtual asset space following the passage of the Virtual Asset Service Providers Act.
Let's take a look at how the cedi is faring against major trading currencies and how some of key commodities are also faring on the global market.
On the interbank foreign exchange markets, the dollar is selling at 11 cedis 41 pesewas. It recorded no change. The British pound is selling at 15 cedis 21 pesewas. It lost 22 pesewas. The euro is selling at 13 cedis 27 pesewas. It also lost 10 pesewas. However, be guided that these figures could be higher at a forex bureau near you. On the global commodities markets, Brent crude is trading at $109.26 per barrel. Gold is trading at $4,540.80 per ounce, down by $111.90. Cocoa is trading at $4,002 per ton, down by $187.
That was an update from the Forex and commodities markets. And that'll be all for business news on Sunrise. For more business stories, kindly check out our website, 3news.com. I am Christabel Success Treve. Thanks for listening. The rest of the team is on standby. Don't go away.